JB here. Hope everyone's doing outstanding. Thursday, July 3rd, 9:01 a.m. on this jobs report Thursday. Usually it's on a Friday. Very rare for it to be on a Thursday, but obviously 4th of July holiday. Tomorrow, half session today. Markets close at 1 o'clock. And what a doozy. 8:30, the data came out. The unemployment rate dropped from 4.3% down to 4.1%, and then uh, severely besting estimates. I mean, a lot of folks were just like last month expecting a weaker than expected jobs report, and it came in 147,000 jobs created versus 106 estimates. And then there was a revision, a slight revision upwards for the previous month. So just remarkable stuff. I made a little joke on FinTwit. It's like the perma bears who've been out waiting for this weak data to show up from the tariffs are just still sitting there like waiting. It's just remarkable stuff. I mean, gosh, you still have folks from Doge, right? I mean, the government layoffs. When is that hitting the numbers? And it's just, I mean, what will be the next bearish narrative? But I always try to keep things with a half glass full kind of mentality, at least right now. Uh, so it's at some point though, the data might show up, right? So you got to be open to that possibility. But for now, it seems like just every possible data point that could show weakness or show inflation or show contracting economy outside of a negative GDP report, which was kind of skewed based on the imports exports, it just it's tough, right? I mean, you can create the narrative because we're at all-time highs, right? So, uh, very easy for bears to create FUD, but for now, just remarkable stuff. I mean, so I hate gaps. Here we are at 622 on the SPY, broke over 620 in the afternoon, closed pretty much right at the highs of the day yesterday. And the thing is, it's a short session here today. So hopefully markets can kind of hold their ground. Like if we do get some weakness, just want to hold 620 and then hopefully have a solid end of the day, solid close in the green. Then we have the tax bill, right? That'll be, who knows what's, voting this morning. I don't know if that's going to get resolved today, but at least we can get some certainty, right? And then go from there. Earnings season, like I said, next week's kind of like a lackluster week as well. And then the following week kicks off the Q2 earnings season, which will be, uh, well, last quarter was all about tariffs, and now it's going to be like, is there tariffs going to be as much talked about? It's going to be other concerns. So it's going to flip back to the AI story. It's just funny how everything shifts. So anyway, take a look at the S&P. I still don't have support resistance lines here, so it's kind of tough. I had 609.50 to 620. So at some point, I'll draw that 609.50 on there. But until that happens, I mean, take a look at yesterday. I was mentioning when I was doing a rant yesterday afternoon, between 12 and like 3 o'clock, we were in a tenth of a percent trading range. I mean, we were having 8-9% trading ranges on the SPY back at the start of April, and now we have a tenth of a percent trading range. Just remarkable how things have changed and shifted. So to me, again, that's why it's always important to have an open mind, whether you agree or not agree with policies or all that fun stuff. I mean, it's just you got to hopefully have a perspective that allows yourself to be open to the possibility, hey, the markets could rally, or hey, the markets could sell off, without getting completely set in stone on your case and then just getting destroyed. I mean, if you're a bear, I mean, people are short. I mean, how long they've been short for, and then probably short all the way at April 7th, and then probably double down. You still have people thinking. So, all right. So that's kind of overall markets. The U.S. dollar strong here this morning, ramped up after the data. So again, another one of those narratives. People saying, "Oh, people are pulling their money out of the U.S. dollar because they don't believe in the U.S. anymore," or the U.S. debt is not as attractive as an investment, even though that credit rating downgrade of the U.S. Who remembers that? Feels like it happened eons ago. Uh, Anyway, all right. So that's kind of the overall market here. Now just individual names, and I kind of talk about some days being harvest days, right? Where I have some positions, some take some time to play out, some happen intraday, some happen over the course of a couple days, but some trades played out yesterday. So first, obviously, Reddit opened flat. It was like 152. I almost opened in the red, and then boom, off to the races all the way up to 165 by 10 o'clock. Just it's been such a volatile name, especially after the open. And then Reddit does what it typically does. It sells off from those highs. So I locked some in for over 100%, and then some more in for over close to 300%. And then I was watching it come down. It was like 161. I'm like, I don't want to be in a spot where this gives it all back. So I locked the rest in. And then I might revisit here today. I put it on the watch list. The premiums are expensive for next week. And not only that, it's like the 166, 165, 166 area. Looks kind of like resistance on the weekly. So I'll probably hold off on adding anything, but don't be surprised if I try some lottos here. And they actually announced their earnings date. I don't know what that is, but I'll click on that later. And then Apple, right? So Apple monster week this week, up over 5% after that news that they might try and acquire their way into fixing the Siri problem. I I just think it's the start of removing the negative sentiment around the name, and I think it trades north of 220 in the coming weeks. Able to lock some to 212.50s. Kicking myself. I shouldn't say kicking myself. I had a plan, and Apple's can be fickle, right? It could be range bound. I didn't want to be in a spot where I lose my profits on the calls, so I had locked in those 212.50s, which traded up to over $2. Who knows where they are today? Then I went and got some 220s for next week. I closed some of those out to cover costs, and then I went and got some July 18th call. So I think it heads higher. It might not be the fastest move. It might have some bumps along the way. But you start looking at the 200-day moving average is right at 222. I think that's a good short-term target, probably next week, and then I'll revisit. So that's Apple. RH got that Vietnam news yesterday, kind of helped. Finally, I've been talking about this deal with Vietnam for the last couple weeks as being a catalyst for Wayfair and RH. And boom, it happens. RH all the way up to 212. I had those 220s, locked some more in for over 600 for 600%, and then I held the rest. Of course, it gives it all back, goes back down to, well, not all back, went down to 205, 204. And then once it held the ground there, I went and got some monthly strikes. And I think it heads north of 230 in the coming week or two. So I'll continue to hold those calls. You have folks making the case that the Vietnam deal was bad. It kind of backdoors China, because China, it says that products imported into Vietnam to export to the US will see a 40% tariff. So I guess you can spin it any way you want. To me, it removes uncertainty on these names, right? If you're bear or if you're bullish on RH, it kind of removes speculation that things could be worse. Right now, kind of like the base is set, and I think it's onward and upward for RH. That's RH story. PayPal, I mean, it's up 5 days in a row, slow and steady. Unfortunately, the premiums, which I was crying about, still kind of moving slow, but was able to get some out of my 80 strikes for 100% yesterday. Held the rest. 76.81, that's the 200-day moving average, came right up to it yesterday, and then boom, sold off. Hopefully, you can get some buyers, break through that, and then off to the races. I was thinking of adding more strikes, but I wouldn't call it a torturous move to watch, but it just I'd rather waste my mental energy on some other names as opposed to trying to figure out PayPal. So I'll just hold on to those. Which brings me to TripAdvisor. Gosh, I haven't talked about this one since late last year and start of this year. I always loved this story. If you heard my rants and looked at, I have a blog piece. I'll see if I can post it. It's one of those names that its core business is in decline, but it has two other segments that are major growth drivers, and one of those segments is going to exceed the core business revenues this year. And if you just looked at it as a valuation standpoint, if those two growing segments were spun off, it's substantial valuation for Trip. And so Starboard, finally, someone sees a value like I saw it, and they got a 9% stake. Well, who knows when they added it, but then they said this morning they announced it, and well, Wall Street Journal reported it first. And then in their little press, they said they're going to be in talks with the company to try and extract value. I would assume it's going to be spinoffs. If you know the bull case on TripAdvisor, when I don't know if it was this time, no, it was March or April of last year, or actually it was February of last year. They got a buyout bid for like 28, $30. Then the board actually reviewed. They had a board just created just to review the offer to buyout, and then they nixed the buyout. And then uh, I think it was late last year, they announced they're buying back their stakeholder. It was Liberty Holdings company, Liberty Holdings TripAdvisor. So they bought their stake out. So now they completely own the company, don't have to deal with outside forces. And that deal just took place in the second quarter. So now that's done. So you have to think it opens the door for either a buyout or extraction of more value via spinoffs. Also, back in the fall, when they announced the strategic review of the company or whatever, that was released via filings. And in the filings, it shows that they got buyout offers for 18 and $19 back when the stock was $12. So you have to think there's interest in the company. I think it trades north of 20 in the coming weeks. So I might look for some July strikes and or August strikes. The irony is I still had 15 freebies, June 20th expiration. Of course, those expired. So, less than 2 weeks later, we get this news. So that's kind of frustrating, but not wrong, just early, right? That's how the saying goes. So don't be surprised if I add some strikes there. Roku got a price target upgrade this morning. Bank of America took it from 100 to 110. Maybe the kick it needs to get over the hump here. I think that's it. I was talking about VKTX2 on a watch list. It's got to break out this $26 to $30 range. Again, I was doing the math, 127 days between their enrollment and their data. Last time on the venture study, so 127 days from their enrollment in March brings us to July 31st to August 1st for the data. If you use the same time frame, which obviously that's kind of like fuzzy math, right? It's not. I'm just trying to find any kind of guesstimate on when the data might come out, and that's the best guess I can get. So I would love it to come out in the next week or so before the July expiration, but we'll see. Anyway, let's have a great day, folks. I'll be back on later. Don't forget, markets closed at 1 o'clock. Rock and roll.